And welcome to my YouTube channel, segment 13 on evidence that we are going to have a crash, and it's getting nearer and nearer. Do you know when they sign this next bill for the infrastructure, that'll be $8 trillion. $8 trillion in new debt. What are you, nuts? That's insane. You talk about the market crashing. We're getting so close you can smell it. $8 trillion. Now, listen to what they say about debt. This is your typical BS on these financial shows. Listen to this.
And the attitude in Washington has been that the debt is not a problem.
Debt's not a problem. Debt's the biggest problem ever, because what debt does is slows your economy's growth. Debt kills wages. Debt kills production. And in fact, when your debt is going up faster than what you are producing as a country, that really is a big warning flag. And right now, our debt is growing so fast with all these stimulus programs, it's incredible. But we're not growing the economy, not at all. We're not even 1.9%. This is very dangerous. Now look at this debt. Look at this. This is insane, insane. Look at from 2008. Look at this. Look at this. This debt was insane going up. But here's another thing that's really bad. When you look at, take the debt off of here. Let me get rid of this. Okay, like this. Let me just get this out of here. Okay, when you take the debt, another thing they lied about. Housing. Remember when they said how we had a great housing market? Listen.
Huge miss on pending home sales, down 10.6% in February month to month. Street was looking for a 3% drop, down 0.5% year over year. That
huge miss, huge miss. They're all upset. Remember when they were telling us, this is it. We got this new housing market. It's going to be bigger than the other housing market. It's going to drive this economy. It's going to be unbelievable. Everybody's going to buy houses again. What a lie that was. Because again, remember what's going on. This was different. This housing market was people who were, again, combined income $125,000. These were people who lived in the city. They just wanted to move out to the suburbs. These people had never lost their house to foreclosure. On this thing, we lost 7 million homes to foreclosures. People had combined income of $48,000. Most of these people should never bought a house. These people were very qualified, and these people had good credit, good equity, and they bought homes. But the problem is it's only a small segment of the housing market, and now it's over. So they lied to us. I told you that in the beginning. Remember when I showed you this chart before? Now let me show you something else that's going on. It's very interesting. Do you remember when you go and you take a look at this chart? This is a beautiful chart because when it's green, it tells you to buy. When it's red, it tells you to get out, right? No chart like it. That's why, again, we have a patent and it's trademarked because it's a beautiful thing. Now I want to show you something. When you have a trend, see this here? See how tight that trend is right there? That's called consensus. That's a beautiful thing. See this here? That's called the consensus. That's a beautiful thing. But there's a problem. The trend is broken. It gives you a warning. It gives you a warning, okay? And you want the trend contiguous like that. But when you see it breaking down like this, okay, here and here, that's a big warning. I'm going to show you a warning, and you remember this one. Watch this. Remember when we had this trend going on right here, this trend right here going on, okay? Same thing. Remember what happened here? It wasn't contiguous, okay? Remember, we had a little bit of a contiguous right here. That was it, right? Remember? And then we had a little contiguous here. But the same thing happened on this chart. Remember, she started to break down. She started to break down right here. See how it broke down? Okay, and then remember how this started to break down, give us a warning, and then what happened? What happened then? We had the big crash in February, right here, February. Remember, right there's the big crash. They were blaming it on COVID. No, it's not COVID. It's debt. It's debt. It's not COVID. Housing wasn't the problem. Homes weren't the problem. It's the debt. So this is where we are right now, okay? So let me tell you something. We're getting so close that there's a lot of people I know, they talk to me all the time about mutual funds. They're stuck in so many of these mutual funds, they're going to get killed. You don't know when to get out. My people know when to get out with an ETF. They know when to get out with individual stocks because of my color code. But I designed something for you that you're going to love if you're in a mutual fund, okay? Here it is. This is a tracker, mutual fund tracker, and it has all. On this side here, you have your mutual fund watch list. You can put your own mutual funds in here. You have you get an RSS, an alert. That we post that if something looks bad and you should get out of it, pay attention to it. You get an email, you get a text. And what do I mean by that? Look, See this green line here? If your mutual fund, when it goes up through that green line, that means you're in great shape. Gets up through this red line, you're in great shape. As long as this all stays, okay, above this red line right here, like it's doing, you're in great shape. See here? You're in great shape. But here's the problem right here. You'll be notified. We'll notify you when it breaks down here. Okay, you're in trouble. You got a call to action, okay? When you break down here and then when you start breaking down here, call to action. Nobody calls you. Your broker doesn't call you. Your fund manager doesn't call you. Nobody calls you. Well, now you don't have to worry. You're going to know when you're in trouble and you're going to know to take action, okay? This is a beautiful chart. We have a tutorial on it. We have a video on it. You can have this for 30 days free. Talk to people about this who have a lot of mutual funds or have mutual funds in a 401k. This, for the first time, they'll know when to get out before the market crashes. Believe me, okay? So get it for 30 days free. Look, have a great Easter. See you on the charts next week. And please believe me when I tell you that this debt and the laying of the debt they're putting on now, the increase in debt, is taking us closer and closer to a catastrophe. And I'm going to say one last thing. Please remember this here. When we had the dot-com crash, remember the dot-com crash? When we had the dot-com crash, remember, we could stop it because we had an interest rate of 6%. We had 25 rate cuts to slow it down. The housing crash, we had an interest rate of 6%. We had 25 rate cuts to slow it down. This guy here we got right now, we have no rate cuts. And when this crashes, it's going to fall like a flying monkey. You have no way to stop this thing. And that's why if you're in stocks or you're in mutual fund, we're protecting all of our members. And, again, please protect yourself, okay? And these charts do it. I will see you on the charts.